In this example video, we're going to look at problem 6.5b, and we're just going to put together the new multi-step income statement for a merchandising business. So when we're thinking about a multi-step income statement, think of it as being similar to what we did in Chapter 4 with a classified balance sheet. We didn't change what was on our balance sheet in Chapter 4, we just made our asset and liability categories more specific and a little bit clearer to anyone that was using our financial statements to make a decision about our business. We're going to do the same type of thing here with our new multi-step income statement. So we're going to add in some subtotals and we're going to break our expenses into some classifications. So they give us some information over here on the side for our company, and we're going to put that into our new multi-step income statement format. We actually have 3 amount columns that we're going to be dealing with. So we have 2 subtotal columns and a total column over here on the far right. So our income statement always is going to start with our sales revenue. So over here looking at our information, we have our sales of $8,925,000. So since we only have one revenue, it goes all the way over to our total amount. So we have $8,925,000 that we have here. Right below that, we are going to subtract away our new expense account, our cost of merchandise sold. That's also going to go over here into our total column because we only have one cost of merchandise sold. So remember, this is a trial balance that they're giving us, so we know our trial balance is always in order of account number. So all of our assets are listed first, followed by our liabilities, then our equity accounts, our revenues, and then all of our expenses. And remember, when we allocate out those account numbers, we do that based on how we would see that information presented on our financial statements. So our cost of goods merchandise sold is the first expense account we see, and it's for $5,620,000. So we're going to subtract those two. This is going to be our first subtotal. Remember, revenues minus expenses is always how we do this. We never add them together. So that $3,305,000 is what we call the gross profit. Basically, how much could my business have made if the only thing I had to do was buy some inventory and turn around and sell it to my customers, if there was no other expenses involved. So when you're thinking about gross profit, think about looking at your paycheck. So when you look at your pay stub, it will tell you the gross amount that you earned during that pay period, and that's the number we all wish was actually in our paycheck, right? And then we look and see what our net amount is, and that's how much we get to take home in our paycheck after all those taxes and deductions are coming out. So this is the same type of thing. We're going to look at that gross profit, that wonderful big number that we wish we could have actually said was our net income, but then we have all these other expenses that we have to take out to get to our net income. So we're going to break apart our expenses into 2 classifications. We're going to break them into selling expenses and administrative expenses. So selling expenses are going to be any expense that directly relates to us trying to sell our product. So the people that work in our stores, when we pay them their salary or wages, that would be a selling expense. If we pay a delivery charge, that would be a selling expense. A credit card expense would be included as a selling expense. All of those different types of things would be considered selling. Administrative expenses will be everything else, basically typically relating to what we call the office. So think about the corporate office where your accountants and your human resources sit. We still need those people to keep our business from running and operating, but they have nothing to do with actually trying to sell our product on a day-to-day basis. In each subcategory of selling and administrative expenses, we are going to list those expenses in order of greatest to least, with any miscellaneous selling or administrative expense coming last. So looking over here at our trial balance, so we have sales salaries. It's going to go into that middle subtotal column. So our sales salaries is at $850,000. Advertising, definitely an selling expense for us at $420,000. We have depreciation expense on our store equipment. So when you're thinking about your store equipment, think about display cases and cash registers. Those would be selling expenses for us as well. And in total, we had depreciation expense on our store equipment of $33,000. And then we had a miscellaneous selling expense in total of $18,000. So remember, miscellaneous expenses always come last in each section. So anything after miscellaneous selling expense would mean that we're dealing with an administrative expenses next. So we're going to total those up to figure out how much we have in total selling expenses for that period, and that goes into that middle subtotal column for us. We now have some administrative expenses. So we have our office salaries expense in total of $540,000. We have rent expense. If it doesn't say that it's on our store, then we can put it into administrative of $48,000. Insurance expense for $24,000. We also have a depreciation expense here, but now it says on our office equipment. So probably your computers for your accountants, for example, would be considered a piece of office equipment. And that's for $10,000. We also had our office supplies expense of $4,000. And finally, our miscellaneous administrative expense for $6,000. Notice there's another expense that comes after miscellaneous administrative expense. Anything that comes after a miscellaneous is going to be put into a different category. So we're going to talk about that one in a second. So we're going to add those together to get our total administrative expenses for the period. And then we're going to add those two subtotals, so our total selling expenses plus our total administrative expenses to get our total expenses for the period. Now we want to figure out something that's called income from operations. Basically, how much income have I generated? How much is my sales greater than my operating expenses, those expenses that are associated with us running and operating our business? So we take our gross profit and we subtract away those total expenses. So our income from operations would be at $1,352,000. But remember, we had another expense over here. We have what we call interest expense. Those types of expenses, and we could potentially also have what we call an other revenue, is going to go into our other expense or other revenue and expense section. So when we're talking about other revenues and expenses, what we mean here is that it's something other than what the normal day-to-day operations of our business was established to do. So for example, if I owned a building and it was 3 floors and my business is a sneaker selling business and I operate my business on the first 2 floors because we're not big enough to expand to the 3rd, and I decide to rent out that top floor, I'm going to earn revenue from that. That person is going to pay me rent every single month, and I've earned that. So that would technically be revenue for my business. However, it's not what my business was established to do. It was not part of the normal operations of my business. So that would be considered an other revenue. Same thing with other expenses. In this case, interest expense. We have to pay interest on loans that we have. By paying that expense, it in no way is helping me generate more revenue for my business. So that's considered an other expense. So for us, all we have is an interest expense as an other item. And since we only have one, we're going to put it right over here. And we're going to put a minus sign so that we remember to subtract it because it's an other expense. So now finally we can get to our net income. So we take our income from operations minus that interest expense. We have a net income of $1,340,000. So we've taken it from a gross profit to a net income. Just like you on your paycheck take it from a gross pay amount to the net amount that you get after all of those deductions and taxes are taken out. So again, what's on our income statement has not changed. It's still our revenues and expenses. We've just now made it more specific and easier for anyone that was looking at our income statement to see really what are we spending our revenues money on. We're spending it so much money on selling expenses, a certain amount on administrative expenses, and then we have an other expense that we're dealing with as well.